Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Yeah, I guess I misunderstood the question. I thought he meant the technical analysis of the option itself, but and here a problem with the premiums, right?
Yeah, I think I might have misunderstood.
You probably got it right. I got the question wrong.
No. So and if that was your question, Charles, so if you were asking about price action of the options index, like the SFC here, or whether I'd be looking at a chart of the spot, I don't know. I try to not get too complicated. I find that if you're really diving, the market has a certain amount of randomness in it anyway. I don't think there's a big difference. So if you have access to SFC and you're charting and doing some TA with that, I think you're going to make just as valid decisions as if you were looking at the spot, or another derivative that represents the franc. So I think it's more personal preference than anything else.
Well, John, it makes a lot of sense. I see a question from Gerald, and this is a question I get all the time. I think you already addressed it, but let's go back to it, about open interest. Obviously, the open interest here isn't as great as SPY or trading Cisco, but do you mind just going through it back again and talking about, your view of open interest?
Yeah. Well, it's kind of funky because, index options, which these are index options, they're a little bit. It's normally when we look at open interest, so if we were looking at open interest on like Microsoft, for example, and Microsoft options, right? Microsoft is really actively traded, or you use SPY as an example, SPY, the S&P 500 ETF. It has tons of volume on the actual ETF shares themselves, and that translates to big volume and big open interest in the spot market and a really tight spread. And so I think the option traders, justifiably so, will oftentimes look at they'll look at a stock option that has really low open interest as a warning sign that there may be a problem here, and oftentimes that low open interest it may be problematic to trade it because that low open interest is usually correlated with a stock that's not really actively traded. Maybe it's only trading a few thousand shares a day, or tens of thousands of shares a day rather than a million shares a day. And so it's kind of a function. The open interest in the option is kind of a function of the volume of how much they're trading the underlying stock. And with index options, like the Forex options, you have to consider that there is a spread here, and you have to worry about it and think about it and plan for it. But I don't worry about liquidity because the underlying here is the Forex itself, which is, I think the last numbers I saw from the Bank of International Settlements was, closing in on $3 trillion a day traded in the Forex. So there's tons of liquidity. There is a spread issue, but planning for it appropriately, I think, kind of reduces that problem quite a bit because there isn't a liquidity problem itself. There isn't issues with, the underlying is so liquid and massive. I find that overcomes a lot of those problems.
Thanks, John. Let's give everybody another 15, 30 seconds if you have any other questions. Again, I just want to say, as far as John's concerned, John, you do tremendous work, and because I'm in options education, and we do everything free because we're an exchange. When I go to your website, learningmarkets.com, I think it's incredible because everything there is free, and there is tremendous quality. I have to say that it's not always the case when I'm listening to other people teach options. I don't really think that they seem like they have another agenda, and I just want to commend you. Your website is great for education.
Oh, thanks. I appreciate that.
Question about brokers. Do you just want to talk, and I don't have a problem since that is your broker, on why you selected the broker that you did? I get that from Jose, John, on brokers.
Sure. I actually have, so I'll answer this question two ways. I'm a big believer, for those of you who have seen, I've had a couple of articles syndicated around the internet about diversifying your brokers. So I'm a big believer in having more than one brokerage account. You only have to say the word REFCO before everybody goes, oh yeah, that makes sense. So I think that diversifying your broker is a good idea, so having more than one.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.